In this video, trader is going to review a gold trade. Stay tuned. Hey guys, warm welcome to you. It's something I don't think I've done before. If I have, it's very limited. But what I want to do, guys, is review a gold trade that I've taken recently. This was a good trade, and actually in another video, so make sure you're subscribed. I'm going to talk about a trade that didn't go so well. Fortunately, it was only a small loss, and that's what you want to do really, is you want to kind of have small losses and big winners. But I wanted to review this because I was just going through my journal, I was printing out the notes, and I was writing some charts, and writing some annotations on charts, going to stick them in my folder. And I thought, you know what, this is actually something that may well help you guys as well, and see the thought process perhaps behind the trade, why I entered where I did, why I exited where I did, and also it's very much in line with some of the setups and strategies that we talk. You know, it's the same approach, it's the same metrics, the same filters and triggers. So go and check that out if you haven't yet already, to discuss some of the setups. So let's go to the screen, let's talk about it. I tried to get it recorded on this screen, guys, but it's not so good. So I'm trying to cram it on this laptop screen. Hopefully it'll still be fine for us. So what we've got here, gold. Now let's have some backdrop to this. So we have a daily chart on the left hand side here, and we've got a 50-minute chart on the right hand side here. So what I'm looking at here is, it was a couple of days ago now, it was around here on the 18th, I think, or 17th, 18th, it was the 18th. So we've got this bull flag, right? This is a classical bull flag stuff. You know, those of you guys who know what I'm talking about with a bull flag, this is what we're looking at on a daily. So I'm aligned long, right? I want to be aligned long. I've been aligned long for a while. I haven't traded it yet. It's the first time I've traded it. I haven't traded yet in terms of in this little pattern. I'm still waiting for my entry, but I want to find something to go long on. Now, ideally, that would have been better there. That was probably the best of the bunch, the little push down lower. But, you know, we're still flagging at highs. It's good, it's good, it's good. It's ticking boxes for me. Okay, so I'm scanning gold every now and then. I've got my times to review it. I'm checking it out. I'm looking through my filters, and I'm waiting for a trigger. Now, this here is ultimately something that's very, very interesting to me. I'm going to try and bring this all in, but if I can't, maybe we can look at it on the, let me just see if I can get it all in for you guys. What I'd started to notice is that we're getting $35 to $40, I don't know, maybe I can put it out there and you can see, we're getting $35 to $40 kind of moves from high to low on gold, and this was going on for quite a while, for the past, you know, since really the beginning of the month. We were getting kind of these moves, $35, $40 moves, and then I saw this kind of move up here. Right now, this is interesting to me because we've seen these moves. This was a $20 move. So in theory, I'm thinking, okay, we've got $20 left to move that down here slightly, and we're within this range here. We've started now to poke to the upside. We've had a good run from the low, and we've consolidated a little bit. We're on a 15-minute chart, don't forget, guys. We've had a good run from the low here, 1385s. We're now up here, and we're consolidating a little bit up here towards the high end of the flag, which is good. So I don't want to chase it. I don't want to start buying it here yet. That's a little bit premature. But when I see on the 15-minute chart, if I can bring it in, scrolling, when I see it starting to come down, fake out here, then push back up, now I'm kind of interested, right? Because we've done this little fake out here. Let me get the brush out. We've done the same kind of thing here. We've pulled back, we've faked out here, and now we've started to rip up, and we're clean on the higher time frame, and we're still within my framework of $35 to $40 moves, and we're looking very nice. All of a sudden, I'm interested. I'm going to pull the trigger. So let's just clear off some of these things so we can see. So we start to push back up. I'm just going to check my entries here for you guys so that we are giving the correct information on this marker here. This is my long entry here. So my long entries here, after I'd seen this nice fake out, 50-minute chart, by the way, daily on the left, pulled down, faked out, pulled back up. Very nice trade to make because I'm quantifying my risk. Where do you think my stop is? You guys have got it. It's going to be under this low, exactly where it was. There's a stop marked on here. There's my entry here. And what am I looking for? Well, do you know, I'm looking for a breakout of highs. There's no reason not to. We're quite close to highs. We're about here. when I took the trade. We've got some kind of resistance above us, I get it, but we're in the bull flag, we're in the right kind of scenarios. All the filters we talk about were all ticked for me. I'm happy to take this trade. And as we start to push the highs, then great. Now, what I do is, I do this very often, is I have an order to fire off into the market at a specific point in time. Now, why do I do that? I do that because I don't want to be sitting in front of the screen meddling with my position. I feel like I've got a good position. The risk is quantified. It's a low risk trade. Let the $10 risk or $8 risk, or whatever, $8.90 risk or whatever it was. It's a good trade, and the potential upside is huge. However, I don't want to be holding this for a long period of time. I want to see it go, and I want to see if it goes, I want to stay in the trade. But I'm happy to come out and come back in. So I need to have this kind of this balance. I don't want to sit in front of the screen watching it because I feel like it's a good trade. I feel I want to keep it. I've got my stop in place. So what I do is I have an order to go in at 5 minutes to 9, which will come into the end of all the markets, etc. Now, that will go in and will close me out of the position if I haven't been stopped. So I don't know what's going on. And I happened actually to know what's going on. I was checking it on my phone. I was at the gym, and I'm just checking it every now and then to say, okay, where are we? Fine, we're looking okay, let's not look at it again. Not meddling with it, just reviewing it every couple of hours just to see what's going on. Do I need to adjust it? Do I need to change anything? No, I'm happy with it, fine. Market ends comes to the close. I end up coming out, and again, guys, it's partly luck, but partly a read of if it's going to break out, I'm expecting it to close, putting inverted commas as gold never officially closes, does it at highs. Now, bearing in mind, 9 o'clock is about the time UK time, everything is closing, the equity market's closing, options market, etc., etc. So that's my reasoning for that. So that's my theory, and happens to be a little bit of luck that it is the high of the move. So my close was up the high here, and the exit was about literally a few ticks off that high. I didn't get that spike there. It was a few dollars off the high. So it was a nice $20 trade. You might be saying, well, why did you close it? Well, I'm actually interested in holding it for a further break. But what coming out of the position does is it allows me to bank something. It allows me not to be in front of the screen, and I can always go back in. Okay, if it rips off high, then fine, I might not go back in. But I can always assess it. And generally speaking, guys, if it's a trending and closing at highs, you're going to get opportunity to buy it again. And you've got to consider it as the same deal. So coming out of trade, nice trade. And by the way, guys, a little thing, if you're not trading on spread bet and CFD, if you're trading it directly in the exchange, just be careful of trading GC, because GC, even one contract, $20 moves a couple of grand. It's so you've got to really, if you've got a smaller account, trade a spread bet or a CFD. And guys, we've got our recommended broker in the description below. Go and check them out if you haven't got a spread betting broker yet. But trading it with small size, just be careful, because the full size contract GC, if you're trading a couple of lots, it's going to be swinging quite a lot, and you have to, if you're a small account or if you're a newer trader, you don't want that. You want to dampen down that move. So, spread betting or CFD is the way to go, or trading it via a spot broker, regulated, of course. All right, so yeah, good trade. Came out of the highs. If I can get off this and get onto my cursor, came out of the highs. Right, so now we're here. Right now we're here, and we've come off the high and we're closing there. So it's good. It looks like it's going to have a further extension, right? I'm ready to literally come back, see what I get out of that, and go back into the trade and hold it for a further move. But we start to kind of drift away. So I decided to leave it till the morning and see what happens. I wake up and I don't see us going to fresh highs. I'm not that keen on it by now. I've still got a bit of cushion really mentally. That's probably an inferior way of looking at it, because maybe the exit doesn't really matter and I should be back into it. Decide not to go in, decide not to take the trade again. Happy to come out with that. I'll bank that kind of move. But here's not to go, oh, look at this is a great trade, because I'm going to do a video again in a second and talk about a trade that was a stop out, because I just want to kind of show the real trading, guys. We don't always win all the time. But the thought process behind it, and putting everything together, really, I think that was why it was something that I wanted to cover in this video, because it was putting together. We'll talk about bracketing your move and knowing that things are moving in like a $40 range. And again, I've got to scrap a bit of paper here, but it works. Knowing about your higher time frames, knowing about some of your patterns, your filters, your triggers, executing that position of stop, letting the market show the supply demand imbalance, and that's what I'm really kind of focused on for my own trading. And then having sometimes getting lucky, but sometimes saying, well, that's an expectation. I expect to get out near high, because if the market does what I want it to do and it is kind of breaking out and trending, then we will get a close at highs, and coming out near the close would make perfect sense. Having a little bit of luck as well with that. And then reassessing and kind of adjusting your approach and seeing what you want to do the next day, and keeping a clear thing. And the gold is very much on my radar now. As of time I'm talking about it, I expect to be back in it at some point, but it changed pattern slightly. I won't go into that in this video, but it just changed pattern slightly, and maybe there's something else to be had out of it. But anyway, the point is, guys, hope that's helped. Covered just some of the aspects of a trade. And let me know your thoughts and comments in the section below. Any questions, of course, feel free to ask them. I'll see you next one, guys. Take care. Bye-bye.